Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to the Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an absolutely amazing Tuesday. We're going to do what we do each and every day on the DMC, taking a look at the same 10 to 12 futures markets from an educational perspective, taking a look at potential breakouts and reversals as they happen. Quick reminder to those of you that are part of the Traders Army Network, we have a live Q&A session tonight, so join us tonight at 7 p.m. Central for our live Q&A session. Mic's hot, cameras on. We'll have a good discussion on things that work. So yesterday was a day where you have to embrace the 6-candle rule. Very important to embrace the 6-candle rule yesterday, and we'll explain why, with a couple of our different positions and setups. So the S&P yesterday, I had spoken about the fact that we could have had a little bit of a flip here, old support, new resistance, and a potential breakout to the upside. So we did get that breakout to the upside yesterday and got a pretty nice run out of it. It ran up for about 15 points. We were looking at it at about this area here as our final take profit area since we were running into some resistance. And then overnight, we started to see a bit more of a sell-off. So the S&P was our best trade of the day yesterday, still in between our major levels of supply and demand, but starting to kind of give back some of that we pulled in yesterday from the S&P. So when I look at where we may go today, just taking a look at the 15-minute level here, there is a pretty nice little zone right up here. This is a pretty clean little level that's not yet quite been retouched. That's a pretty good little zone, pretty good little area. It's a retest of essentially what looks like a head and shoulders pattern here. So there's a chance that we'll come back in and give that one a test if you want to give that a run for today. Other than that, the demand levels, we do have a little speed candle reversal point right here where we could reverse, where we could get a little bit of a bounce. But as far as demand goes, your better demands are still a bit lower somewhere down in here, which is the one that we spoke about yesterday. In the NQ, so the Nasdaq met entry at the very end of the day yesterday. It was our supply level, as that one came right into our 15-minute area of supply. And then our 6-candle rule comes into effect. This is where we talk about the 6 candles. Because remember, if you found it on a 15-minute chart, it's 6 15-minute candles. 1, 2, 3, 4, 5, 6. Take your stop, move it to break even. And really, it just did nothing after there. So you either take your stop and move it to break even, or you take a little bit of profit off the table. And that was really the setup, because then we popped up through here. Now, you may or may not have had your stop right above here. You might have taken your stop and put it somewhere up above this wick or even up above this pivot, and in which case you'd still be riding this thing down. I think that the better opportunity today is obviously to continue with price coming down just a little bit, but you do have this area down in here where we could see a bit of a reversal later today. Remember, my thoughts on speed candles is speed candles do tend to get retraced. And so you've got two little areas here where those speed candles retracement could come into play. So on the first level, I'm going to make that a confirmation entry, because I think that the level below it could act as a bit of a price magnet. And if that level below it acts as a bit of a price magnet, then this one right here might be better to be a limit entry. Both of them are on 15-minute charts, which means both of them are slightly lower probability. But overall, they could work out really well. Next, let's move over to crude oil. So crude oil, another opportunity to use the 6-candle rule as it came into this level and then moved away. This was a confirmation short, but once again, 1, 2, 3, 4, 5, 6, and actually it was 7, 8, 9 before it really even moved back up into the region. And technically, you wouldn't have been stopped out even yet. Technically, your stop would be above this pivot, because you always want to take the pivot area. However, the 6-candle rule comes into play. So if you think about it, you've got the S&P, which broke out and ran really nicely. You've got the NQ, which moved after 6 candles. to break even, and the CL, which is break even after 6 candles. So don't be sad. 1 out of 3 ain't bad, especially when the other 2 are break even trades. That's really the reason why we use the 6 candle rule. So looking for what we see today, what we want to do is see in, make this bigger again, looking at our 4-hour, our definitive trend direction now is up. We've moved up. We've hit new higher highs, new higher lows, had this little double bottom here, price action. So as we continue to move higher from that double bottom price action, our targeted price from a double bottom, if I take this distance from here to here, and then move it up, would be this area where we are finding a little bit of resistance right now. So our next level to go a bit higher than that would be this area of resistance here. Well, this area of resistance has already been tested a couple of times. So our next level would be, once again, a bit higher. So I think your better opportunity today is going to be to take a long. This wick wiped out a lot of supply that was over here to the left, which is why we were able to churn through it. And then if we do pull back, I think that you could have a decent little entry right in here. I think this becomes our next best potential entry right in there, formed right at the European market open in that time of the evening where you've got a pretty good market opportunity. All right, gold. Gold was another one that, though the 6 candle rule didn't come into play, we had put out a trade feed update. You can see it. I actually took a screenshot of it and put it on Twitter so that you guys could see as well, that we were moving our stop to break even pretty quickly on this one. Primarily because we were having no correlation with the S&P. So the S&P wasn't giving us an effective correlation as to where this thing might move. And so the stop was moved to break even very quickly. Nothing more to add based on our price movements and what we've seen so far in gold. Next, looking at our bonds and currency markets. The ZN still continuing its next kind of leg down. We had spoken about the fact that our demand area was kind of lulled to sleep, if you will. In these bonds, we are actually rallying up to a decent reversal point as we speak, and I'd be okay if you wanted to go candle to candle short from this point forward. You also, I think, get a decent little run right here if you want to give that one a shot up in there. Next would be the Aussie. The Aussie, it's also continuing its move lower, and so I think our supply level stays intact right up here just above. We unfortunately did not able to get into it yesterday, and could see a little bit of a breakdown off of this area here. So keep an eye on this area here for a potential breakdown. Next, the euro. Our breakdown on the euro came down, hit our target, and then popped back up. So now I'm going to remove these lines that we have in place here, and then our other supply above us is still very valid. The supply level up above us is still valid. And then the Canadian dollar, we are between levels of demand and supply once again. Nothing has changed much since yesterday. Last 2 markets, Great British Pound and Japanese Yen. In our Great British Pound, prices have come to our 15-minute area of supply. We've seen price come into our supply level and starting to move away. If we look at it on a 15-minute chart, we can see that price came into this area and we've gotten a decent little move away. I think at this point it's decent. Your first target's going to be right down in here at $24.99. So we're just about to that target point now, but starting to see on a 15-minute chart some stronger lower wicks coming into play. I think at this point it's safe to take your stop and move it to break even. And we've traded all the way to the top of this level, so we would need to remove it at this point. But the trade itself is already working out and can continue to do so. The Japanese yen level still is intact, right where it was before. Nothing really to add or to take away on the yen setup. So that's our Wednesday market. If you've got any questions, please send us an email, support@tradersarmy.com. I will talk to you all soon. Have an absolutely amazing hump day. See ya.